Okay, well, it looks like our next chapter is over process cost systems. If you recall, in the previous chapter, we looked at job order cost systems, and process costing is generally going to be considered to be quite a bit more difficult than job order costing systems. The process is far more complex, and we have a lot more tools to keep track of costs at various stages of production, whereas job order costing, very, very straightforward by comparison. Okay, so we're not going to get into everything. This is taught from an introductory level perspective, a introductory, sophomore level type class. But do be advised, you probably want to watch the videos and pay very, very special attention because there are some things that you'll get in this chapter from the commentary that you probably would not be able to surmise from a static PowerPoint or perhaps even a textbook. So when we talk about using a process costing system, this is used for certain types of businesses that make products that are homogeneous or the same. If you watch the videos from the previous chapter on job order costing, I believe there was an example slide where we compared a tax return to a bottle of ketchup. And so whereas no two tax returns will ever be exactly the same, both in terms of uh, level of complexity as well as who that return belongs to, we do expect a bottle of ketchup to be the same no matter which one we pick up off the shelf. So we've got some examples here of some businesses that would use a process costing system: oil refineries, paper, chemical, aluminum, uh, food processors. So the ketchup would be an example here. And again, what we're trying to accomplish is with the job order costing system, we were looking at unique jobs and the unique features of a particular job. Maybe we were making blue jeans of a certain size. Here, it's the exact opposite. We're trying to keep all of the products the same, and so but with that, we have an issue of tracking the changes in the manufacturing process probably a little bit more carefully and splitting this process out between departments a little bit more than perhaps what we did with the job order costing system in the previous chapter. So we have an example here, and this illustrates, as does the next slide, one of the primary differences. It says that a process cost system records product costs in work in process accounts for each department. So, this is a bit oversimplified here, as is the next slide, but we do have a slide coming up that I encourage you to take a screenshot of. But notice what we have here, and this is when we talk, I'm going to start right here with materials. Notice that we have different types of materials. And so these materials are flowing just like they would in a job order costing process. But instead here what we're doing is we're taking the materials and they're flowing into a certain department. In this example, the mixing department. Looks like we're making ice cream. And so we've got a mixing department. And when we're done with work in process in the mixing department, okay, we do not go directly to finished goods. In this case, we're going to go to one additional department, which is called packaging. So we're going to mix it, and then we're going to package it, and then we're going to go into finished goods, which is the freezer area. But I want you to understand this could be many, many steps involved here. So we're going from direct materials into a work in process for mixing, which is going to involve um, components not only of the materials that have been moved into work in process for the mixing department, but also this individual right here is going to be direct labor for the mixing department, part of the work in process. And also we're going to have some factory overhead that is going to be allocated to the mixing department. And then this packaging department is going to absorb these mixing department costs and add their own costs to it so that we can ultimately arrive at an accurate figure for finished goods inventory. This diagram essentially shows us the same thing with a little bit more emphasis on the fact that we are talking about a mixing department. This looks like it's for, what is this? Vitamins. So here we have really an extra department. We have the mixing, just like we did with ice cream, and they give you some examples here of what goes into that. And this is a wonderful example. Then we're going to encapsulate these vitamins. We're going to put all of these herbs and vitamins into capsules. Okay, and that's great and that's wonderful. But then we're going to move these costs for mixing and the encapsulating department over into the bottling department, where we actually put these vitamins into a bottle and then probably perhaps also a box, just depending on how high end these are. And then what it doesn't show us in this particular example is that after we have bottled these and packaged them essentially, then we would go one more step further into finished goods. So here's the slide that I really want you to look at. If you're not in one of the classes, I do encourage you to take a screenshot of this slide because it doesn't, I mean, it's very small type and it's very, very detailed. But I will say this. Now, if you can't wrap your head around what's going on here, it's not necessarily the end of the world, okay? But if you can wrap your head around what's going on here, then you can do process costing. Notice we've got some essentially what are T accounts here that we've set up. And so we've got, I'll just start over here at the beginning, materials. We're going to purchase materials. And so the purchase goes, materials are an asset. So we're going to increase that over here on the left side for a debit, right? And then from there, we have basically two different types of materials. Direct materials are going to flow into the work in process account for the first department, all right? And then we're also going to have potentially some indirect materials that are going to go over here into factory overhead, and those are going to make their way up into the work in process account. Notice that these direct materials are on the left side here. That's because they're an asset. This direct labor is not an asset per se, but it adds to the value of the work in process inventory here, as does factory overhead applied. Then we're going to transfer these costs out into the next department and potentially, now not so much in our example because we're trying to keep this simple, but we could have additional direct materials added in the packaging department, certainly could have some indirect materials. Then we're going to move at some point. We could have several departments that we go through this process right here with. We're going to eventually have costs transferred into finished goods. And then when those are sold, so see again, the costs are over here on the left side because finished goods is an asset account, an inventory account. Then we're going to cost of goods sold is going to exit once we sell the goods, and it's going to go over here on the left side on the income statement. Cost of goods sold, this is an expense account, and we know that expenses are increased with a debit or on the left side of a T account. Okay, so that was a very, very quick synopsis of what's going on here. But we also have this little box here that starts off with step A, talking about the cost of materials purchased is recorded in the materials account right here, all the way to step H, cost of units sold is transferred to cost of goods sold right here. So you can use this little legend here to help you figure out kind of what's going on in the basic steps of a process cost manufacture. All right, let's wrap this video up and we will start another one immediately.